Okay. Awesome. Great, guys. Yeah, so, this is Pranal here. Sorry, I'm on my phone right now, but I'll switch on to my laptop in a second. But in terms of what we want to do today, really exciting. We just want to go ahead and introduce some of our experienced traders, just to get some of their background in terms of, what they've been doing, how they got involved in trading, and how they, joined our team and what their process is. And then we're going to jump into just kind of market, topics along the way, and hopefully we'll have some Q&A sessions at the end for you guys to ask any of the traders or myself or Gabe or Alec here. So I know, Alec, if you want to lead this off, maybe like, introducing kind of some of the specific traders, and we'll let them speak, but we'll start there and then we'll, dive into maybe some market topics.
Yeah, so we want to just go ahead and introduce everybody. I guess let's kick it off with Green Arrow. Brian, you go ahead and introduce yourself.
Yeah, thanks. Hey guys, so I'll just kind of start cadence here. If you guys want to follow this cadence, I guess just go ahead. But been doing this for about 10 years. I first started out as a Scottrade user, if anybody knows or was familiar with that. They merged with TD Ameritrade a while back, so I've been doing this a long time. Strategies, to be honest, has changed over the years. I was more of a long-term holder in the beginning, and then as my interests came on, I learned more and more around technical analysis and became more of a swing trader. So I've dabbled in day trading. I have really scalping all different types, but really landed on swing trading just based on my lifestyle and really what fits my routine. So I'd say swing trading is primarily what I focus on and what I do. My plays can sometimes take 2-3 days. They might be overnights depending on if you're a short-term or long-term holder, but certainly more of a swing trader, and then certainly dabble in like day trading, scalping as well to kind of complement that depending on where the market goes. So it's a little bit about me. I'll pass it on. You're on mute, Alec.
My bad. I was saying Bad Luck Bear, you want to go ahead?
I think he is out today. I think he got his COVID shot.
Oh, that's right. Okay.
Yeah.
How about Rambo?
Hey guys. So you know me. My name is Mohan. I go by Rambo, just to be cool, I guess. I've been trading for not like Brian. It's been probably 3 years for me of trading. I'm more of I would say, a common sense trader. I have more better market sense than doing a TA or any kind of that sort. So I know how the stocks move based on the events or catalysts or news. That more of that sort. If you look at it yesterday, before I partnered with TitanFlow, I shared a play for TTD where $200 spread end up paying $3,000 today. So, and I trade based on the events, and most of my trades couple with the flow. So if there is an event or if there is anything, you will see a lot of flow coming for that. And I use flow. 95% of my trades are based on flow. I scalp most of the times. Now I have something coming up in my personal life, so I'll be busy for the next 2-3 weeks. So I'm just doing a swing, and I got really, I would say, famous by giving out lottos and earning plays. I'm not sure if the people have that risk appetite to actually play the earnings. I actually played Nike earnings. It will be a fat profit for me overnight. I'll share my small account plays when I am free and when I feel that okay, it's not too much of a risky play. But that's how I am. And I also changed my style from be with the zero stocks to actually moving 90% of my portfolio to stocks. But today I have took profits in most of the stocks. I feel like the market is overextended, overbought, so I'm just staying cash. And again, because of the personal thing, for next 2-3 weeks I'll be away, not too much active, but feel free to ping me on Twitter or Discord. I'll be able to guide you guys. And another thing is I trade a lot of spreads.
Nice. Love that. Love spreads. Awesome. Thanks, man. RJ, you want to go ahead? That'll round it out since Bad Luck Bear isn't here.
Sure. Thank you. Hey guys, I'm RJ Trade, RJ, whatever you want to call me. So yeah, probably a lot of people know me too. So I've been trading on and off like I would say like 10 years or something. Like I was in college 2009, 10 when we had a big crash. I was still trading. I had no idea. I was like literally just looking at the penny stock, what the cheapest stock, and thinking it's going to double down, right? I think a lot of people start with that mentality, and I kind of lost some money doing that. So I stopped for 2 or 3 years, like trading not for me or whatnot. And I think I got back after I graduated in 2011. I kind of got back into it. And at that time, I read the book, The Intelligent Investor, one of the by Brian Bill, one of the kind of Bible for Warren Buffett preach. And I was kind of investing in all those, kind of Coca-Cola kind of company, dividend. They're great, I think, but I think you can do a lot better these days. So I was kind of doing that for 3-4 years, and 15, 16, I read a book called How to Make Money in the Stock Market by O'Neill. It's one of the great book everyone should read if you think you are a trader. I'll give you a grade. So basically right now, I focus mostly on the growth stocks, which are growing like 20-30%, growing really rapidly, going kind of owner-led, like Netflix, Amazons, and all those, right? Disruptive kind of is in that book. They kind of tells you how to find those kind of like 8, 9, 10 beggars. And I'm always like, I'm not looking at the bottom. I like to buy the top breakout, all-time high breakout, and it actually like it works great if you you can actually back test and see it, right? And it has been so many times studied, like people tend to buy when it's at bottom, and it just keeps getting cheaper. Cheap becomes cheaper. And you see, probably have seen, right, a lot of people kind of talking about Tesla so overvalued, P so high and whatnot. Amazon P always has been higher, right? From when it was like 1200, 1300, it was probably around hundreds, and till now it's like it's always expensive. The thing is, like, as a human, when you want to eat out and buy something, you want expensive stuff, but in terms of stocks, you want cheap. Why? Kind of doesn't make sense, I guess. But yeah, and I also make a lot of videos. I've been not so active few days. I'm starting. I actually made I plan to upload this morning, and I was talking about Tesla and how Tesla flow, a lot of flow. I'm kind of getting it. You guys can check it out in my YouTube, and I posted in Twitter too. And kind of TitanFlow short in the morning, right? So I was actually making that video this morning. I did not upload. I just uploaded. But yeah, if you have any question or comment, just let me know. Ping me, DM in Twitter or whatever. I usually check it. But yeah, I do a lot of options, mostly options. I also have some Theta account, a lot of Theta strategy too. And I do call spreads and everything. But yeah.
Thanks, RJ. Appreciate it. So now that we've introduced everybody, let's go ahead and let's dive into a little market talk right now. And I'm going to leave this open to all the ETs, and I'm just going to ask, how do you feel about the current market climate right now? We know the market is always changing, and you always have to adjust your strategy. So what kind of adjustments have you made recently, and what's kind of your sentiment on the market right now? And any ET, just go ahead.
Yeah, I mean, I can first. I mean, this one. I think with this one, especially like if you follow me on Twitter, you probably see a lot of bearish content that I post. And a lot of times, don't take that for like actual trades that I make. So, for example, I think I pour my emotions more into Twitter than I actually trade them. So I'm still trading as if it's a bull market, right? So until it cracks, I'm still just chugging along. Now, my position sizing and my risk management is going to change along the way. When I start seeing pullbacks, I'm going to change that up a little bit just to be a little bit safer. But until honestly, like I'm going to let it crack because I'll tell you over my 10 years, one of the biggest mistakes I made was I actually bought into VIX right before COVID. It was probably like 4 months before COVID, and I sold it in the end of January. And then of course the thing, took off and I
Right.
missed out 400%, which is usually how it always is, right? But anyway, so the signs will tell, like, you probably hear a lot of us talking about charts and how the market's, it's going to crash. You can see it all over Twitter. It's everywhere, right? But until it does, you got to keep going. Just be safe, stop losses, you know, keep your risk tactics in place. And, until that happens, you just got to keep going. So,
Yeah, just to add to that, no one went broke taking profit. So as I was telling when I was introducing myself, I bought a lot of stocks around February when there was a dip, and today I realized profits on them. Most of the stocks I think I took more than 25%, and there were stocks which I took 60% as well. So I thought, okay, this is good for me. I'll wait for the dip. When the dip happens, maybe in September or October, not right away, I can just buy back. So taking profits never hurts, and especially when the market is overextended like this, you trade day by day and don't swing too much overnight. Just make sure if you are still want to keep your stocks portfolio, don't want to sell them. Make sure you have hedge, a QQQ put or SPY put. Always have it in your portfolio. Swing that overnight. This is not the time to buy leaps. That's for sure. And another thing is, if you don't believe in crash, at least trades spreads rather than outright calls or puts. And also just because everyone is saying market is going to crash, no point buying a huge number of puts and then thinking that you will make million out of it. So you have to wait for the actual signals, take it easy, take it day by day, and then when it happens, it happens.
Yeah, definitely. Yeah, so Brian, I agree with you completely. Like when you said that definitely hit with me. Like what I put out on social media, you would think that like I think the sky is falling, and like the things that I say about the market, just looking at the trajectory of the S&P over the past year, I mean, it's absurd. But with that being said, we have to adapt to the current market. So I'll go ahead and scalp and swing calls all day until the market proves me otherwise, because I'd rather, be wrong and make money. So I think it's good to put that out there, that you can have a thesis on the market, but it doesn't matter if you're right or wrong. It just matters if you're making money. So just, go with the trends. And like Mohan said, like just, taper off your position sizes and be a little more cautious with taking profit. I'm only 21. I've only been trading for a couple years, but anybody that I talk to that's been trading for like 5, 10 years, everybody tells me the same thing. They're like, this past year, this is not normal. Like the volatility and the, just the uptrend we're in, it's not sustainable. And I think it's important to acknowledge that this isn't normal, but just because it's not normal, it's okay to profit off it. You just have to know when enough is enough. So I really
Yeah,
like that point that you made.
especially after the COVID crash, there are many new retailers retail traders got into the market and then
Right.
just kept buying it. When there was a dip around January and February, I think many have lost their profiles just because they don't know even how to buy a put. Everyone was just buying calls, making money, buying calls, making money.
Right.
So this is where actually floor definitely helps you. So when you see a lot of spy puts or QQQ puts coming above us,
Mhm.
that means that, hey, there is someone that is actually worried about a market crash. There, that may be a hedge for them, but still you can be cautious by looking at those. And if someone says that retail investors are actually moving the market, I don't buy that. There are
Mhm.
always hedge funds behind that. So it's a game played by them. If you still feel that AMC boom or GameStop boom happened just because of retail investors, I don't buy it. So just be careful. It can be dropped anytime. As I said, make sure you have your hedge in your account.
Yeah, I totally agree, right? And yeah, the thing is like you and me, we cannot move the needle in the market. It's a trillions dollar like but like every even very small stock is like billions of dollars are traded. Retails is like less than 5% of the overall trade, right? So you don't have that money, you don't have that power. But what they do is when you are fueling it, they will bid it higher, they will make it and sell it to you, right? It just, you need to be I think there's some advantage being a retail, right? You don't have to worry about the volume and whatnot. I mean, they are talking about billions of dollars, so there's liquidity and whatnot, a lot of things. But yeah, retails is not moving anything. I mean, and other thing is like I think if they bought it AMC again, I think train playing is good. There's nothing wrong with it, but I think it makes people's like a bad habit, right? I mean, the predicting like a short squeeze, these are really, nobody knows. People's are, everybody's right now, if the stock goes 10-20%, everybody's like, oh, short squeeze. Nobody knows what's, if it's really true. It's a really rare event if you look into it. Like it's
Yeah,
very very rare event. It doesn't probably like happen with GME, but yeah, GameStop, but it doesn't happen that really. And the other thing is like what happened is when you are, it's addiction, right? A lot of people are addicted. The thing is like in trading, you need to have an edge. Otherwise, I mean, you can get lucky once or twice, but you cannot get lucky all the time. Like if you just gamble, you will lose ultimately. That's how casino works, right? I mean, think about it. Like if you toss a coin, it's a head and tail. It's a 50-50 percentage. You may get lucky like two head. You made some, but if you look at the, if you do 1,000 draws or 2,000, it's 50-50. That's the fact. Nobody
yeah.
can change it unless the coin is biased, of course. So
I
I think,
myself, I'm a good example for whatever RJ is saying so far. When I started trading, I started with probably like $2,000, and at the end of the day, I'll not have any BP left. So I'll swing the whole $2,000 in calls or puts. And also, it's because hey, some guy on Twitter said that this is going to moon. Some guy on stock tweets said that hey, this is going to drop, or hey, this guy in Discord told me that it's going to moon. So it was like that, and the urge to actually make plays with all the BP that is available is still there for many people, and that's not going to be good in the long term. You need to make sure that you attain that level where you still have BP and you don't feel like making a move. That's when you know that hey, you are good at trading. That's the ultimate. You still have BP in your account and you don't make a move, you hold the BP. That's when you feel that okay, I'm good at trading.
Yeah, RJ, I liked in particular what you said about like, the people like the retail traders think that they have the power and the short squeeze and everything. And I was talking to my buddy, like I bet that the hedge funds love this narrative because when AMC and GameStop went down, I was going into TitanFlow, and it was like you would see like a $2 million out of the money sweep come in, and then it would moon like $30-40. And then you'd have all these people on Twitter like, yeah, we're destroying the hedge funds. And like, we were just laughing. We were like, who do you think sent this $1 million call order that just went up 400%? Like
Yeah, that's true.
they're fueling it, and
Yeah,
they don't care what the narrative is
yeah,
because
yeah.
they're making millions off it,
Yeah,
billions probably.
yeah, and the thing is like there's no one hedge fund, right? There's so many hedge funds and they have their own rivalry. So maybe yeah, one could get like, of course, and that's how the market works, right? You think one way, I think different way. That's how. Otherwise, if everybody was thinking same way, everything will go up or everything will go down. I mean, that's how everybody is thinking differently. Somebody's bullish, somebody's bearish, and somebody's looking at fundamental, technicals, and whatnot. So there's so many dynamics. That's why. And the other thing is like, yeah, and the other thing is like, think about it, like the hedge funds and all those things, they actually know what you're talking in Wall Street bets or whatever, and whatever platform. They have like tremendous tools which grab the data from Twitters and a lot of other in real time. So I think they have so many eyes than what you have, and they can actually afford to do that too, right? It's expensive to get all those data and analyze and kind of decide. So
I like you made a very good point there where you were talking about the flow. When you're following flow, for sure, there are a couple of tricks to follow. Always look at the weeklies and the next week expiries. So if there is any flow that is coming for weeklies or next week expiry, just look at 2 weeks expiry, and if you want, you can add one more week of expiry, 3 weeks of expiry. Those are the ones that actually move the market. So if someone is buying Tesla 1,000 call for next January, it doesn't move anything. But if someone is buying Tesla 750 calls, they keep buying, that actually moves the market. Because if when you have time, just read about gamma squeeze, what market makers need to do when there are OTM calls that are coming in. And the next thing is make sure whether the price is above the ask or at ask. If it is below ask, you for sure know that someone is selling. So there are stocks like Wish, AMC, people are hoarding stocks and actually selling calls because the IV is so damn high. Why not make so? Wish, if you sell a 16C, it's $90 on Monday. So why not take that 90 dollars out of others' pocket? So someone is selling the calls. So make sure, don't fall for those. If someone is selling puts, that is bullish. If someone is selling calls, that is bearish. And also make sure that they are only this week, next week, or maximum the other week. That's it. Don't think beyond that, and don't try to mimic the flow if it is beyond that expiry.
Yeah, I'll jump in here real quick just to like add on to that. Everyone trades differently, but if you are looking for, day trades or maybe 1-2 day swings, then you're gonna have to make sure that you look for actionable flow, which, like you said, is going to be at the ask, out of the money. Usually, sometimes a week out, sometimes 3 weeks out. It depends on the kind of mood that the stocks puts in. But yeah, you got to be watching this weekly unusual flow, because if you're watching leaps, that's not going to tell you anything. So like those could be hedges, those could be anything.
Yeah, well, I mean, as you know, most of us as options traders, I'm sure that a lot, I know a lot of us day trade, but even if you're not day trading, you're most likely swinging a month or two out. So, when we're looking at flow, we want aggression, right? So when somebody is betting on something that's out of the money short term, there's your aggression. They're betting on a sizable move within a short period of time. Now, if you're a long-term trader and you see interesting leaps, then, that might be something to look at. But I feel like it's safe to say the majority of us either day trade or we swing trade within a month or two of expiration. So yeah, it's definitely important to keep an eye on that. Skylar, Mohan got that question. Okay, so something I wanted to ask Brian. I know that you trade off of your phone, and a really important thing about TitanFlow is that it's a mobile app. So I feel like that really ties into your trading. So I just kind of wanted to ask you because, myself personally, I have to trade off my laptop and have my monitors. So like, somebody that has success trading off your phone, I feel like it would be really good to hear about how you do that. Maybe some tricks you might have for, maybe people that have to work during the trading day.
Yeah, it's funny. A lot of people have interest in this topic, which is surprising just because of the day and age that we live in. But there's a lot of people surprised that, I'm primarily a mobile trader. And so, this really started, I just want to say maybe like 4 or 5 years ago. And for those of you that don't know, I'm a part-time trader. I'm not even a full-time trader. And I trade I trade stocks, I do shares and options, I do crypto, I do futures. I'll be up at 1 a.m. trading still on my phone, depending on where I am. But really it comes down to the job, the job that I have outside of trading. I travel, and, I wanted a system that allowed me to be in an airport and be able to take a play if I needed to, or be on an airplane, or, walking out of a meeting or whatever it may be, right? So I didn't want to be tied to a laptop and being able to miss it. So, to be honest, I've got kids too. I've got young kids, and, I wanted to be able to kind of work that in if I needed to, if something happened. So I just didn't want to be tied to a desktop. And so that's kind of where it all started. And, along with that, it isn't just about picking up the phone and going. You have to to make it work, you got to build a system around it. And really what I mean by that is, I'd say I'm probably 90% mobile because there is about a 10% desktop process in there where I've got to tweak, different like scripts. So I use Thinkorswim. So I build Think scripts and scanners that I set up. And so I've got scanners that tie right to my phone. So if I need to find plays, I've got a list of things that help me. So, so I'm not digging through 500 stocks. I've got 20 coming to me and I can pick the best 3. So, long story short, I've built this system in place, everything, and I'm talking about even things like, I've got a specific phone that allows me, it supports that system. Like I've got a huge phone, it's got a stylus, it's got certain memory amount, allows me to hold, like there's just so much criteria I needed. And so I've built all this around over the years. And so, yeah, I mean, that's kind of how it started. And you got to remember too, that everything is evolving and these brokerages and these companies, like TradingView, are going to support mobile more and more, and the retail traders want it more and more. So, I don't think this is a phase. I think it's going to get better and it's going to get bigger, and you're going to find and see a lot more people doing it. So I know it looks uncharacteristic. If you see, I would think it too if I was somebody new and I saw somebody post like a mobile, picture of something. But those of you guys that follow me on Twitter, you've seen some of this stuff work out and how easy it is. And that's, that's just the technical analysis and the trading pattern that I have. So I keep it easy, keep it simple. And a lot of it is based off like what RJ said with, William O'Neill's theory. And, another name I'd throw out there is Nicholas Darvish. If you don't know that name, that would be a good one to look up. Just his famous historians that have proven systems that work. That's kind of where my background started, and where I've taken and run with it, and it's worked. So
yeah, great book. He literally did when there was no chart, nothing, like it's crazy.
Yeah, another one I would say is A Complete Guide to Volume Price Analysis by Anna Cohen. I think
Yeah.
everyone is reading it now. It's a great book to understand the volume and the shelves of it. Yeah, so again, if you are new um, from trading, what I would say is have a watch list, like a couple of stocks from every sector, and then study the stock. Keep studying the stock, how it moves, how Baba moves. So if you ask me how Baba moves, I can answer you that in my sleep as well, because I follow Baba like anything. So just like that, people will be following Tesla, or Square, or even AMC. I mean, there's nothing wrong in that. So keep reading those. Make sure you have your support resistance lines already charted up. So when you open it, you don't have to keep doing all that stuff. And if you look at the flow or anything, you, you don't have to trade every stock. You get better at 10, 15 stocks, and you are good. You don't have to trade every stock like Tesla, Futu, I will even say MSTR, yeah, and then now AMC, Apple, GME, and few more. You don't have to trade anything else because most of the flow is actually coming for these stocks only, right? So master those stocks so that you know where the support is, where the resistance is, how they move, and get better at those stocks, and rest will fall into the place.
Yeah, Mohan, I love that point. When I first got into trading, I really struggled for a while because every day I was trying to trade like the stock that everybody was talking about. And I learned pretty early on that a lot of stocks in certain sectors have a lot of relative strength or weakness, and they just move nice. And I started to learn their movements, like, so now for the most part, I just trade, Tesla, Amazon, Nvidia, Square, Roku, Facebook, like the names that I know move and that I've been studying them for 2 years now. So, if something else pops off, I'm good with that. Like I have my names, because the thing that I think people forget is that there's literally thousands of tickers. So if you try to catch like every hot stock, like every now and then it works out, right? But for the most part, if you just build that like foundational list of names that you study and like you start to learn how they move day in and day out, I think that's much more beneficial than trying to watch the entire market.
Yeah, especially when you have 2 or 3 stocks from every sector in your watch list.
Mhm.
When you open in the morning, go through that, you know that which sector is actually moving. So there may be
Right.
days where every sector is dying, only the banks are mourning. So you know that, okay, today is the day for banks, and then you can get
Right.
onto Goldman Sachs and JPM. These are the two stocks everyone buys. Or if you want to less options, I mean less premium, you go for BAC. Three stocks. You don't need to have all the banks in your list. Just three banks is more than enough.
For sure. So we're getting a lot of questions coming in. I'm going to go ahead now and let's start hitting some of these questions because there's some really good questions in here. And then I'll try to answer them the best I can. And any of the ETs, if you want to jump in on it, feel free to do so. So the first one was, why is it important to watch open interest over volume, and what are you looking for? So as Mohan said, open interest is the amount of contracts open out on the market, right? So that number, it's important to keep in mind, open interest only updates once a day. Once all of the trades settle, all the brokerages and the market makers, they update that number before open, and then that's it. And then volume, as you know, is updating on every transaction. So I'll give you an example. Tesla yesterday, when we had those aggressive out of the money calls come in, the open interest on the 650 calls was 19,000 and the volume was 33,000 15 minutes into open. When you have volume that is significantly outpacing the open interest, it signals that there's above average interest in that stock. So like if you saw something with an open interest of only 1,000 and the volume was 10,000 on the day, that's very significant that 10,000 contracts have been traded when there's only 1,000 contracts out there. So that's a big reason why we definitely take note of open interest and volume. Like if open interest is 2 or 3 times the volume and we're only like an hour into open, that's a very strong indicator that that name has above average interest. So that was a really good question. Hope that answered. And then due to work, you will not be able to trade as the flow comes in and you're looking into any trade. How best can I use TitanFlow to trade overnight or next day trades? So,
There is one more
something,
question in
yeah,
between. I
go
think
ahead.
you missed. What is the best strategy for trading along full-time job in your experience, RJ and Mohan? So I'm a full-time IT project manager. So I start working at 8 a.m. in the morning, and I'll probably sleep around 1 o'clock in the night. But I trade during the market open. So when you're trading options, and when you get better at it, if you will know that the market moves only really good between 9:30 to 10:30, and then again it moves after 2:30 p.m. So even in that is where flow actually helps me. I keep a look at the flow and also the pre-market movement of the stock. If there is news or catalyst that actually came in, or say someone upgraded a stock to and gave the price target of like 50 above or 60 above, and if stock opens at 4 a.m. at say $100, and it actually sustains and stays there above $100 by 9:30, that means that okay, it is pretty strong. And I look at the flow for that stock, and then I jump into that stock, and I make my 1 or 2 trades and be done with it. It all depends on the profits that you want to make. So if you are trying to make $100 a day, I always say $100 a day gives you 25K at the end of the year, which is a significant amount if you are already a full-time employee somewhere and making money. And $200 a day is 50K. So make sure you have the goals set so that you don't have to sit in front of the system. And especially with TitanFlow coming into the mobile, unlike Cheddar Flow or anywhere, you can set alerts saying that, hey, if any flow is more than 250K, and if it is weekly or OTM, just give me an alert. It gives you an alert, and then you pop into that trade, keep an eye, and then be done with it.
Awesome. The next question, I think, tied into that, what you actually just answered really well. And that was asking about if you're working, how do you utilize flow for swing trading? So, in my experience, I always use flow to confirm my chart work. So whenever you're looking at your charts, maybe it's overnight or whatever the case may be, and you see a setup that you think you like, look for the flow to confirm that setup. An example would be over the past 2 or 3 weeks, I've had 3 really nice swing trades on Amazon, Tesla, and Roku. And in all 3 of those instances, I mapped out on the chart where I wanted to see them get to in order to confirm my entry. And then I also looked at the flow. So let's say you're working and you're just looking for a swing trade. Go ahead and go into the alerts tab and set alerts for the ticker you're looking at. Let's say you're looking at Roku. Go ahead and set an alert so that it notifies you when Roku flow comes in. And then whether you're on your phone or whatever the case may be, you see that flow go in, go into your broker, go into your account, and then you can go ahead and take an entry. And you can feel good about that because you already looked at the chart, or any of us as well. You can go into the Discord and ask us to look at a stock, and if you think it looks good for a swing trade, and we can go ahead and give you feedback on that, and then just set your alerts. I've found in my experience that's where my best swing trades have come from, when I set alerts on flow and it confirms my chart work. So I don't know if any of the ETs, because I know I'm definitely not a swing trader. I day trade, but I do swing time to time. I think
Yeah, I swing
Brian, maybe
only.
Mohan.
I swing only when there are events for any particular stock, like a split is coming up or an ER is coming up. If you look at it, I posted FedEx on Monday or even Friday. I don't remember. It was a good trade till end of the day today. It was around 296 and it closed at around 302. It was 100% option and it was a swing trade. So, and also you have to look at the TA, do some technical analysis, whether it's in an uptrend or downtrend. It actually broke the uptrend. If you look at Baba, and if it actually moves up $3 or $4 during the US market, that's a for sure swing, because it actually moves in the Hong Kong market as well, and it opens another $2 or $3 up. So Tuesday night and Wednesday night, both nights Baba moved. I think I posted on Tuesday night in Discord. Wednesday night I couldn't post it. That's how again, as I was saying, study the stocks, study the market, and then see how they move. Because if you swing Tesla, it's a hit and miss. But if there is a lot of flow and you know that it's an uptrend, it moves $20. But if it doesn't move a dollar, you're actually losing out on theta, all that. Okay.
Awesome.
Next question is how to avoid wash sale in options and commons. Maybe Brian can answer that, but from what I know, if you trade the same option, like say if you are scalping Tesla 700C again and again, you cannot avoid wash sale. But
Yeah, so yeah, I'll speak to watch it a little bit. I because that's actually one of my goals this year was to reduce the amount of I had, because that's something I've actually honestly it's something I've struggled with over the years, because when you're doing straight options, it's a little bit easier, but if you're doing kind of the trades that I do where I mix shares in with options, the moment you go shares, any option you get at that point is in jeopardy of that wash sale. So firstly, I'd say just watch that if you're going back and forth between shares and options. Then number two, if you are going straight options, and I think you talked about a little bit, Mohan, you need to like tailor or change your strike, your expiration. You can't trade the same strike or expiration over and over. It's got to be different. So that's just basically how I vary it. And to add on that, I will do month out, multiple months out. Sometimes I do leaps, but all that changes depending on where the market is. So it's not uncommon for me to go and do, a leap out on Microsoft, because again, like I said, I'm a swing trader. So if I get good momentum and I see a chart working in my favor, I would love to be able to hold that for 6 months when maybe I planned to hold for a month or even less than that. It just happened to work in my favor. A good example of that was ExxonMobil. I want to say it was maybe like a month ago or a month and a half ago. Got on a good uptrend and almost formed that cup and handle for those that saw that, and it bounced around a little bit, but now it's kind of up at almost mid 60s now. So that was a really good one, to get early on. But to answer your question, change your strikes and change your expiration. In my case, I track all my trades in an Excel spreadsheet. Now there are services that can help with that, but if you're doing that, that makes it a little bit easier to track it. So
yeah, let's take one more question. For your sell points on your contracts, are you looking at percentage, or how do you sell it? So for me, I usually get in any option with depending on the buying power I have, and I divide the buying power and then make sure I have to buy 50%. You always scale into a trade. You never go full position. Say if you have $1,000 BP, you make sure you scale into it. At least you have time to scale in twice. So you go with $400 or $350, and then say if the stock moons by then, you don't have to scale in, and then you sell it. So I usually use scalping technique and I use 9 EMA and 20 EMA. And if it is extended over 9 EMA, I take profits. And again, 30% profit, 40% profit, I don't care. If it is overextended, I take the money. Everyone is different. And if I entered with 2 or 3 options, I make sure I take the profits on 2, and then I leave a runner. And as long as it is an uptrend, I let it run. That's how I look at it.
Yeah. So for that question, I think it's really important to understand that options, by definition are completely different from shares in the sense that they have theta and they eventually expire. So I have a video on the Titan YouTube that explains risk versus reward. And this is something that I am very meticulous about when I'm trading. Just because a stock might moon, you could actually lose money on the option based on theta, based on implied volatility. So I never really use, not to say I don't use, I definitely want to understand if the stock is going to move, but it's really important to understand, is the implied volatility very high on this contract? Is the theta really high? Always keep those things in mind. Don't just focus strictly on the shares and then think that just because it goes up or down, you're going to be able to profit on the option side. And then with that question, guys, we'll go ahead and we'll answer all questions you have at the end. We won't end this meeting without answering questions. But Gabe, are you able to go ahead and share your screen? And then we're going to go ahead and dive into some new features of the app, because I know that it might be a little confusing with the complete layout of the app changing up. And there's some pretty exciting stuff that we want to go over.
All right, give me a second. I have to remember how to do my phone. All right. Give me a second. I have to trust my computer.
Gotcha. So guys, while he's doing that, something that we added just a little bit ago is on the very first page when you open the app where it says today's snapshot, we've added a lot more filters. So you're able now to filter, if it's a sweep or a block trade, you're able to filter through if it was at the bid, at the ask, above or below. So you have a lot more options now when you're looking at the snapshot page. We're going to go over that, and then we're going to go ahead and go over some of the key features that I really think is important for you guys to understand, because if you're paying for Titan, I really want you guys to understand all of it so that you're fully utilizing all the resources of the app.
All right, can you see that?
Yep, perfect. So just like that, you just open the app, first page is today's snapshot. And then that filter tab at the top, we used to only have, I think, weekly, calls, puts, stocks, and ETFs. So now, like, if he slides over towards the end and he clicks on sweeps, a little bit over, there you go. Now, because, we know that for the most part, blocks are kind of irrelevant, right? Because they're privately negotiated, so they can be untrustworthy. So we can now filter out the blocks. And, before it might have said that Tesla had 80 million in call options sweeps today, but now we filter out the blocks and it's only 44 million. So that, to me, that's a really important feature, so that you filter out the blocks. And then if he goes a little bit to the right, you can also see, all at the ask. Like if he clicks on at the ask, now you can see that there was 16 million in Tesla calls today that came in at the ask. So you can start to get a sense of how much flow there was in aggression. So this helps you kind of filter out the noise. And then from there, let's go ahead and let's go to the alerts tab, because to me, that is the most important feature of the app. So I really want to go over that. And we've been talking a lot about people that work, or, maybe you have kids or whatever the case might be, I don't like the idea that you have to stare at your screen to be a profitable trader. And that's where this is really going to come into play. If you click on the little bell in the bottom right corner, once you go to this tab, it's going to pull this screen up here. So let's say that we want to know anytime flow comes in over $200,000. So where it says minimum premium, you're going to slide that yellow button to 200,000 or whatever the case may be, 250,000. That's what I do. And you can do all tickers or you can do a specific ticker. I like to leave it open to all tickers just because I like to see whatever's coming in. And then for expiration, I do 21 days. And this is just an example of what I do. But again, feel free to filter it however you like. And then I like to click on calls and puts because that's going to show you both. And then at the bid or at the ask, because I want to know if they're buying it or selling it. And then out of the money. And then sweeps, because remember, we want to filter out the blocks. So just for a reason why I use these filters, again, short-term expiration and out of the money, both of those things are signaling to us aggression. If it's 250,000 or higher, it's a large order. And sweeps, so just to real quickly, guys, block trades are private trades between two institutions, right? So they're privately negotiated. So you might see an above the ask block trade and it looks super aggressive, but it was privately negotiated. So it's not very trustworthy. A sweep is where an institution is sending an order across multiple brokers to the entire free market. So that's a lot more trustworthy, and that's what we're going to keep an eye on. Now, if you click that blue check mark there.
I like just one thing to add there.
Yeah.
So if you have at bid and at ask, you will not get above ask in your alerts. So just keep in mind of that.
Oh yeah, I think you set one. You can do two different filters where you set one for at the bid and then one for at the ask.
Yeah, and then
yeah.
if you do this, you will lose above ask. So you don't do that. Calls or puts, you don't have to even select them because those are the only two there.
Gotcha.
Yeah, just do
Yep.
OTM and then 21 days. Those two are good. And then when actually you get it, it's a beautiful beauty here that when you get an alert on the screen itself, it will show you whether it came at ask or at bid and ask or between bid and ask or above ask. So you can actually see by just looking at the notification and you will know.
Yeah, it's going to show you everything in the alert. So the reason we're setting this now, say you're at work and you're in the middle of doing something at work, you can't stare at the market. As long as you make sure that your notifications are turned on in your settings, it's going to go ahead and send you a push notification like you would get a text message or something to your phone in real time. And that's, whether you have the app open or closed, which is very important because without setting alerts, you would have to stare at the app all day to know when flow is coming in. So just wanted to go over that, make sure that you guys are utilizing that feature there. That's something that I 100% utilize. Even though I trade full time, I may not have the app open. I might be on Twitter or something, and then it sends it to me so that I know right away. And then let's just go over a couple of the other things. Let's go to the middle page, the level 1, 2, and 3. So this page here, you're going to have what this is doing is this is picking up repeat orders, right? So you see at the top there, the Tesla 690 puts, it's picking up trends where multiple institutions or the same institution is sending multiple sweeps of the same contract. And this is indicating to us that there is interest, significant interest in that particular contract. So we get asked a lot, what is the difference between level 1, 2, and 3? And really the only key difference is that the algorithm that's detecting this, level 1 is going to be your least aggressive, level 2 is in the middle, and then level 3 is going to be your most aggressive. And what determines aggressiveness is the size of the orders and how far in between, right? So if they were sent like 2 minutes in between, that's going to be more aggressive than if they were sent an hour in between. This page right here is actually how I was able to identify Tesla's breakout yesterday. The level 3 algorithm detected 9 orders that came in on Tesla's 650 weekly calls within 15 minutes of open. So if there's 9 sweeps that come in for a couple $1 million on the same contract, that's very strong confirmation. So that's something important to keep an eye on within the app. And then the last important feature that I want to go over is going to be the little light bulb in the bottom right corner. And that's where you're going to be able to see any trade ideas from all the ETs. So all the ETs we introduced today, as well as Bad Luck Bear, and then myself, Gabe, and Pernal. So any of us, we're going to be putting out any watch lists, trade ideas that we have, anything that we might see. So this is really important if maybe you're watching the flow and maybe you're at work and you don't have time to look at charts. We're going to be, what we do is we go through the market all day and we're just looking for anything that looks significant. And we're basically sorting through everything and helping filter out the noise. And then we're putting out there, what is significant, what flow looks significant, what trade setups look significant. And then again, same thing here. If you go ahead and you follow us, so let's say we clicked on Bad Luck Bears profile, and then you click follow. Now you're going to get, and then make sure that that blue bell in the right corner is lit up. And then that's going to send you push notifications anytime he puts something out on the app, just like when we set the alert filters for the option flow. So with that, go ahead, guys. If you have any questions at this time, go ahead and send them into the chat box. How do you differentiate if sweeps were bought or sold based on ask and bid price? So obviously, there's no way to know 100% for certain if a sweep was bought or sold. But think of this as yourself when you're trading. When you are, let's say you're trading a contract on let's say Roku, and the bid is 620, right? So that means that people are trying to, let's use a contract for an example. That's a good idea, Gabe. Go ahead and click on one of them that was at the ask or something. There you go. Yeah, any one of them. And then slide down so I can see the prices. There you go. So in this case, the bid was 0.7 and the ask was 0.71. So in this instance, it's really hard to say whether they were buying or selling it because the spread was so tight. But like if you have something where there's a $30 spread and they're sending it at the ask, that means that they're willing to pay the full price, because keep in mind, they're not just buying one or two contracts. They're buying hundreds, maybe even thousands of contracts. So if they're paying at the ask on a $20 or $30 spread, they're initially losing a lot of money. The second they open their position, they're going to be down a lot. So that's indicating to us that they're buying it because they're getting filled at the ask. If they're sending it at the ask, it means they want to get filled immediately, which again is showing us aggression that they want to be in the position.
Yeah,
and then vice versa for at the bid. If they send it at the bid, it likely means that they're selling it and they just want to get out of their position. So they're willing to sacrifice a little bit of profit in order to get out of that position. Mohan, did you want to say something?
Yeah, this one, look at it. It is actually so at bid. So this is actually sold rather than bought. So someone actually sold the calls just before it. And also looking at deep ITM, no one sells ITM calls. If it is deep ITM, definitely you can feel that it is in the direction. If it is OTM, that's when you need to ask yourself whether it is ITM or OTM. Ask bought or sold if it is OTM.
Yeah. So that's another question we get a lot is, what do you do about in the money flow? Now, I only use it for one reason, and that's if there is options that are not significantly, I'll say they're a little bit in the money and they're, at the bid, then to me that signals they're taking profit, and that might be a bearish signal. Outside of that, when you're dealing with in the money flow, it can be a hedge because they have a large position in shares. It could be that they're offsetting a negative position they have to balance out their portfolio. It could be that they're completing a spread. It could be multiple things. So for those reasons, we tend to not look at in the money flow. For me personally, and again, every trader is different, but I look at in the money flows similar to how I look at block trades. And what I mean by that is that they're not very aggressive and they can be kind of confusing because there's so many reasons that they could be happening that I tend to block them out and just focus on OTM flow.
Yep. OTM, above ask or at ask within the 3-week expiry. As simple as that.
Absolutely. And then I don't know if anyone asked that. I just want to put it out there because I know that's probably one of the most popular questions about option flows. What do you look at within the money? Let me see. Does ETF matter or is it always the hedge? There's certain situations, and you have to keep in mind, this comes to relative volume. Okay, so Pernal said something to me a week or two ago that really stuck with me. And when he said that sometimes Apple, you have to treat it like an ETF because it gets so much flow on a daily basis that you kind of have to ignore it. So when you're dealing with something that doesn't usually get a lot of volume, and this is when we're looking at the open interest versus the volume. When you have a ticker that doesn't really get a lot of flow and then it's getting a significant amount of flow, that's something to focus on. Now, going back to ETFs, if you have a lot of flow for an ETF. So like a month or two ago, I think maybe back in March or April, when SPY was selling off really aggressively and tech was selling off, every day there was like 2 to 300 million in put sweeps that were out of the money. Now that is something we want to look at because typically SPY and QQQ get like 50 to 100 million in flow. So if they're getting 200 to 300 million, that's above average. But outside of that, you kind of have to treat it as a hedge. And you just have to keep in mind that like 100 million shares of SPY are traded a day. So there's going to be a lot of option trading. Like today, there was only like 5 million. Is that right? Or is that because you have the filters on? Yeah, turn the filters off real quick. Yep. And then like you can see today, QQQ had 62 million in flow. I would and put flow, I would kind of ignore that just because that's common for QQQ. Now, if that number was 200 million, that's something I would keep in mind because again, that's relatively high compared to their normal volume.
So for when you look at the snapshot, you may not know, but when you are actually following the flow and then suddenly you see SPY getting 250K, 400K puts continuously, that means that if they are weeklies, you know that the market is going to coming down. So you then you can probably put stop loss in your calls or other stocks or anything.
Yeah. Yeah, that's a great point, Mohan. I would also say to that look at the rapid flow. When you see repeat orders, like he just said, when you see like 250K, 400K orders, let's say SPY puts, and they're all coming, like you see 4 or 5 come in within 20 minutes, then that might be a significant indicator that that's actually significant flow. It's not just a hedge. Especially keep in mind, same exact thing, short-term expiration and out of the money. We're always looking at those two things to signal to us that it's aggressive flow, which is what we want as short-term option traders. Who's taking the other side of sweep orders? So those orders, as opposed to blocks, are going out to the entire open market. So who's taking the other side of that order? It could be me or you, right? So those orders are getting broken up and sent to brokerages. And then let's say you go to buy a SPY call, you could be buying it from a sweep. You know, it's just getting sent out to the entire free market. And they're breaking it up so that they're more likely to get filled on it.
Yeah, if you are not buying, some market makers are actually buying or selling. So if a hedge fund says, hey, I need the 700 call on Tesla and I need 10,000 contracts, market maker actually sells it. So it doesn't mean that someone else has to buy it. Maker is ready to sell it.
Right, right.
Yeah, usually they have to provide liquidity. So all this Citadel and all those, their main job is, again, it goes not only they are not the only one, but majority of the part, right? Like you have tens of billions, like nobody had collateral for their stocks and whatnot. So those market makers are actually just providing liquidity, whether it's shares or even options or anything, pretty much.
All right, guys. Any other questions? Go ahead and just send them out. We're here to answer. And then also, while you guys might be sending any questions out, if you go to the chat box, anybody who isn't using TitanFlow, if you're interested, for a limited time, we have a 2-week free trial that you can redeem. RJ Trades just sent the link there. If you go ahead and click on that, you can go ahead and test out TitanFlow for free 2 weeks and just check it out.
Some other flow which actually charges me like 95 plus taxes per month. And when Sagar and everyone brought this up, idea of TitanFlow, and I saw that, I was amazed because the other apps that I have, I even tweeted at them asking if they are working on a mobile app. They said that's not their plan because they are not worried about retail traders who want to pay only $40 or $50 per month. So they are looking at traders who have bigger portfolios and are willing to pay 1,000 or 1,200 per year. So they are not working on it. And the second thing is, when people, now it's COVID and you are working from home, so you can have 2 screens or 4 screens, you can keep looking at the flow. But then what happens when you go to office and you cannot open your flow screen and keep looking at it, right? So you need that in the mobile, and it gives you an alert. That's one. And the second thing is, they are just throwing you the flow, and there are no ways where someone else is actually giving you trade ideas. So we don't call them alerts. We are telling them as trade ideas, where we are saying that, hey, this is what can happen based on the flow. That's another thing. And the next one is, Sagar and others are doing really good job in actually giving you a real time help. If you are having any trouble with the app, or you don't know how to use the app, you can just ping them in the Discord, and they respond to you right away saying that, hey, this is what it is, this is how you use it, you reboot this, or you click here, it will work like that. And you don't find that in other apps. You have to send them a mail, and then they respond after 3 days or 4 days. By the time, you lose interest on that question. And the last one is, there is also a Discord community, where we are also part of it, and we can guide you through it. Again, we are not an alert based Discord, but there are places that we will definitely share now and then. But the focus will be more on the app, where we share the trade ideas within the app, so that that's where we want to concentrate and keep it clean. Discard is still there for any discussions, any question and answers, but ultimately we want to share the trade ideas within the app and guide you guys.
Yeah, yeah, good comments by Mohan. And yeah, the thing is like, right, so there's a 2 weeks trial. Just use the link and try it out and think about it. Like, if you actually follow the flow for Tesla, you'd have easily made 50 100 bucks. Like, even if you have one contract, right? Tesla went like, I mean, if you had the kind of the money, you made like 200 300%. So even if you got 50, it would be 300 $400, or probably like whatever, right? So um, it just have to work. Like, if it works 1 or 2 times, you can get a year worth of the. So you always need to look at your ROI, right? You put $50, what you are getting. Of course, if you are just getting $10, probably not worth it, right? If you put $50, and even if you make $60, you made $10, right? So it paid for itself. So
So there is a question: how can this app be used during bear market? It's the same thing. You see a lot of puts again. That's what I was saying. So
exactly.
many new retail traders don't know how to buy puts or trade puts. So there are both sides of the coin. If you are good at trading calls, you should be good at trading puts as well. And Flow helps you with that. If a news breaks out, or if there is a lot of bearish flow, just get on with it. Make sure you have your resistance and support lines are there. And then say, if it breaks support, then yes, you can get into it. But if it breaks support and goes above, and and then if there is a downtrend break, that's when you cut losses. So the flow is good irrespective of the market conditions. So don't think that this only applies for bull market.
Yeah, yeah, definitely. I created a video for on Titan's YouTube about ditching your bull bias. And I think that's important, especially for a lot of newer traders, because, you know, no shade against you. Like, it's completely understandable that you're afraid to play the downside or you don't understand it, because all we know is the upside over this past year for the most part. But the downside is very aggressive and profitable. So there's no reason to be scared of it. You just use the same thing as the upside. You use your chart work. When something looks bearish based on your chart work, let the flow confirm. Just like, let's say if Tesla has 10 orders come in on weekly out of the money calls at the ask, same thing. If you have 10 orders come in on Tesla that are out of the money, short-term expiration, and they're at the ask, then that's signaling put buying. Now if your chart confirms that, boom, just play puts. I get that it can feel weird to play the downside, because it's just like natural in our brains that you want the stock to move up, because it just makes sense that you're making money off the stock going up. But puts are extremely profitable, because there's a lot more aggression. There's the saying that we take the stairs up and the elevator down, and that's very true. So don't limit yourself. As option traders, we have the ability to profit off of the upside and the downside. So theoretically, we should be able to profit in any market, no matter what the scenario is. Yeah,
Yep.
just
Wha-
trust
wha-
just
wha-
trust yourself, and you'll be fine.
Yeah, one last point to say, that I keep saying that we put the trade ideas Again, make sure you have your own confirmation bias, your own due diligence before you take a trade. Because if say Brian is saying something is bullish, I may not agree with him, and I'm not going to take the trade because I don't feel like it. So just make sure you do your own due diligence, make sure your
Yep.
own TA, and then take the advice and keep it. And also trade with the money that you are able to lose.
Yeah.
Don't think about the money you want to make. Think about the money that you can lose and then enter the trade, because suddenly North Korea can bomb and everything can go to zero. So you
Yeah.
never know with options, right? With the stocks, it's okay. You hold, maybe you sell it or your kids will sell it sometime in profit, but options, you lose the money because of you have an expiry date. So make sure you trade safe, trade with the money that you afford to lose.
Yeah, definitely, Mohan. I think that like for example, last week I did a swing trade on Tesla, and that was a $1,500 contract. So like, me personally, I'm trading with about 80K. So if I lose 100% of that contract, let's say that the market just dies and I lose 1,500, like I can still sleep at night because that's only like 2% of my account. So,
Exactly.
if you're sitting there with a $5,000 account and you're thinking like, I trust Alec, man, this is a good trade setup. Like, just keep in mind, $1,500 is like a third of your account. So if you lost like 80% on that trade, that would set you back weeks. So just, trade to your account size. Um, because even if you trust me, or even if you're taking your own trade and you trust yourself, there's nothing is a guarantee. So Mohan, great point. Trade to your account size.
And also scale in, scale out. These are something I know someone will say, hey, did you sell already? Do you have paper hands? Don't worry about that. We are not here to send screenshots. If you feel like you want to take a screenshot of something, that's when you know you have to sell it, right? So scale in, scale out is really important. Keep scaling in and then keep scaling out, take profits, leave one or two runners once you get your investment back, where it is a free trade for you. And there are many things that we can discuss, maybe not now, but maybe next time we can have a session on how to trade spreads, that we can help. If you are in Robinhood and say, I have only 3-day trades, what should I do? We can help you how to overcome that by making it a spread, all that stuff. Maybe we can plan next session on that, Alec.
Yeah, yeah, definitely. Another important question that just came in. Regarding execution and strike selection, do you pick your own strike and entry price, or do you follow the option flow strike and entry price? So again, I'm waiting. I always, for me, my chart is number one priority. And that comes down to having a strategy that you trust. The trading theory that I use, I wholeheartedly believe in it. Anytime I've lost on a trade, if I look back, I can find the reason it didn't work out. It wasn't because my strategy didn't work, it was because I did something wrong. So make sure you have a strategy that you trust, because option flow is not a 1000% guarantee. I always make sure that option flow is confirming my chart, not the other way around. That my, whatever the case may be, I'm not taking a trade based on flow. I'm using the flow as one of my many tools to confirm my trades. So I use my chart for my entry price. Now, if I see option flow coming in before my entry price, that's okay. I still want to wait for my personal entry. Now, you can follow the flow, but I personally believe that you should follow your own trading strategy and your own entry. Now, as far as strike price, keep in mind, what is your time frame and what is your strategy? Are you day trading? If you're day trading and you're following the flow, you can go further out of the money because you're still going to profit off of a nice move. Just keep in mind that you're not going to make as much money, because those contracts might not go in the money. If you're swing trading, then it's a little more difficult because they may be selecting that specific strike price because they plan on it going in the money to offset theta or whatever the case may be. So in that case, it may be more beneficial to follow the strike price on the flow. And that's how I personally trade. I don't worry about the strike price when I'm day trading, but if I'm swing trading, then I might follow the flow with the strike price. Yep, anytime. Yep, follow your own ideas. Absolutely. So follow something you believe in. Follow something that you can back test it and you understand why it works. Because when you lose on a trade, you shouldn't be second guessing your strategy. You should almost look at losing on a trade as an opportunity to grow and look back at your strategy and see what went wrong, and then use that to better perfect your strategy and perfect yourself as a trader. Don't ever let losing a trade make you second guess your strategy. And if it is, maybe you either don't fully understand your strategy or maybe you need a better strategy. One thing about this past year where this market is going parabolic is there's a lot of people that think they have a winning strategy, but it was more or less correlation, not causation. And what I mean by that is it wasn't that their strategy was working. It was just that the stock was mooning. So any strategy looked like it was perfect. So keep that in mind as well. Does this app tell what expiration date to use on an option? Well, it tells you what expiration date the sweep was. It gives you the expiration date that specific order came in on. As far as the trade ideas tab, we'll go ahead and dissect the flow for you. Or if you join the Discord, you can just ask us like, what expiration date do you think about this? And we'll tell you, follow the flow, or maybe we'll say you could go even further out or not. I would never strictly use that for one thing. I would always take each trade and each flow is a different thing. Don't say that you have to do something a certain way. Take each opportunity as something completely different. Does the app have dark pool data? We do not, for a couple of reasons. One is that it's just it can be very complicated and delayed. So we feel that for a mobile app, it's just not worth diving into that because it's just going to really complicate things. And, in my experience, dark pool data can be very useful, but sometimes it can be a little misleading because it can be a little bit delayed. Yep. Where do we see the app going? You mean like?
Yeah, I can take this one.
Yeah, absolutely.
I feel like I don't want to hold you guys too long, so hopefully we'll end probably in the next like 5 minutes here, just so we can have some ETs get off the call especially, and we can answer the rest of the questions in the chat. So please keep sending them out. I think the biggest thing when I first reached out to Sahir last year in terms of creating this app was our biggest thing was providing kind of an education space, right? And so yes, the flow is an arm of the app right now, and it was like the singular arm. We're really trying to expand into kind of a full kind of service model here where we can provide education for you guys, as well as provide useful financial data that you guys need as well, right? So we started as a flow app. We wanted to make that super simple, the UI amazing, really easy to use. Now we jumped into kind of this trade ideas app, right? And we're like Alec and Mohan and the rest of the team has said, we'll never be an alert service. Like Alex said, if we can teach you how to trade in many different ways, I think what you guys best can do, especially in this trial period, or if you're our subscribers to our app, is that we have so many resources. Like even if you're like just looking at people trading, or Brian's posting a trade, like reach out to them and ask them specifically, like questions about the process, why this worked, why this didn't work, right? If you're a sponge to this process, I can promise you guys can get really good at trading. I think what that holds on to in terms of where our app is going is really making it interactive in a way where the education's at the forefront, right? So I'm not gonna get too much into the details because we're working out in terms of how to make this a stronger app, but it's all about the experience, right? If we can show you a trade idea or like make it easy for you to understand what the process is or what Alec is seeing with his process, just because things are going in and out very quickly. Our biggest thing is the education. And so if we can visualize that for you guys in a mobile tool, and hopefully, in other tools in the future, that's our main goal. So in all honesty though, we're always going to try to keep the simplicity. And if it's not working in our system, for example, dark pool doesn't work with what we're trying to structure because we believe that it's not necessarily necessary, we're not going to add it, right? Only things that are valuable to our app. If you've seen, other Discords or other applications, they try to throw 10,000 different things at you. So you perceive value. We believe we can provide value to you guys with a very simple process, with only the most important things. So look out for the features in the future. Sagar can definitely talk about that later on in terms of our next couple of meetings. But we're always trying to innovate. If you guys have any suggestions, please comment in the feedback app. We love that. We love the feedback, and we pretty much make changes on those feedback almost immediately. So please look at that channel and provide any comments that you guys have. So that's it for me. I think it was a fantastic session. Really appreciate RJ, Mohan, and Brian and joining today, and obviously Alec leading this session. Like I said, they are incredible traders. So as much as you can soak up from them, I highly recommend you do so. So that's all for me. Alec, anything else?
No. I mean, like I said in the chat, I could talk market all day. So if any of you guys want to go on Discord or Twitter and message me any other questions, feel free to do so, and I'll get back to you.
Awesome. Sagar, anything?
Nope. I think we got everything, guys. Thanks for joining today. Really glad to have everyone here today. Oh, we have one more question.
Yeah, sorry. I didn't see the message pop through until now. But Juan wanted to, for anyone who's going to listen, share his story with TitanFlow. And he brought it up back when we were talking about the app paying for itself earlier, and I figure it's fair enough to let him unmute and share his story with everyone else. If everyone was to sponges, then it'll be useful. So Juan, if you can unmute yourself, you have the floor for the last 5 minutes or so.
Can everybody hear me?
Yeah, Juan, you're good.
Okay, cool. So I recently ran into the app. I tweeted to TitanFlow, but so the whole thing with Tesla and how it went basically crazy, right? I'm not subscribed, but I am subscribed through Twitter just to get a feel for it. And through you guys, I was able to do 2 trades. Basically, I did a credit spread on Tesla at 640, and I was able to basically make roughly about 5,000 today just because of the alert. And otherwise, I wouldn't be able to. Long story short is I was looking for information where like how to trade, how to do everything. And basically the app is kind of putting everything in one solid place versus me going to different websites, going to different forums, trying to figure out different areas. And I with just by one tweet, literally one tweet, when I because I don't have full access to the whole TitanFlow yet, but with one tweet, I was able to basically profit off of that. And I'm glad that you guys are doing this Q&A forums and ideas, because other apps are not really, they're like you were saying earlier, they're very close quartered, and they'll email you and then 3 days later you'll probably hear from them, versus, hey, I can get everything, and I'm a retail investor. And recently I was able to quit my job and become a full-time day trader. And now I'm able to maintain not my lifestyle, because obviously I still got to pay insurance and all that stuff, but hopefully I'll be able to start my own trading company, and with the help of TitanFlow, I'm able to be more profitable versus and have ideas. And now that you guys are having kind of like a study session where you can go ahead and bounce ideas from like the memberships, that's pretty cool. I just want to say thank you guys again. And you can see on TitanFlow that I think they just tweeted out one of my confirmation trades. And yeah, I just want to say thank you a lot.
Man, that's awesome, Juan. That's really awesome. And also, man, if you go ahead and you join the Discord, a couple times a week, we'll go on the voice channel and we'll hop on a call and just talk about the market and answer anyone's questions. So if you haven't already, make sure you join the Discord and you can get in on those as well.
Definitely. Is there a link to that by any chance?
Yeah. I'll post it in the chat box right now.
Perfect. Cool. Thank you so much. I just want to let you guys know that thank you so much. I don't know how to appreciate it versus helping somebody else out. and showing them the app and showing them how everything works. That's why I kind of said, is this being recorded? Because the level of education that someone needs to be profitable in the stock market is overwhelming sometimes. And what you guys are doing is so amazing.
Yeah,
No,
thanks so much,
appreciate it, Juan. Honestly, like I think, you know, when it comes down to it, it comes back to like the comments I made about the simplicity factor. Like, I think there's swing traders in here, there's scalpers, there's day traders, there's, you know, there's every kind of facet that you want, and there's people that you can just reach out to for any type of assistance. And I think what Sagar and I are going to do, you know, in terms of the next couple months is really, you know, like make that education portion robust. You know, if a year down the line that, you know, you don't necessarily even use our trade ideas, you're only using us as a flow app, like that's awesome for us, right? We are always on the forefront for that beginner and intermediate trader just learning. And that's, you know, why we created the app in the first place, right? So, no, appreciate it.
Yeah, definitely. Thank you so much.
Yeah. Okay, awesome. So I think we're gonna jump off here. I think we've gone for an hour plus. So I appreciate the time. Alex is gonna post some stuff on the Discord, and we'll always kind of be on the Discord just for announcements and stuff. But as app features are coming in, Sagar will post about it. We'll probably have another kind of Q&A session or watch list session into the next couple days and next week. But other than that, I appreciate the time today, guys.
Thanks, everyone.
Wait, real
Take
quick
care.
before you end it, Juan, I sent out the Discord link in the chat. Just wanted to make sure you joined before we close out the thing.
Yes, I did. Thank you so much.
Okay, awesome. You're welcome.
Thanks, guys. Appreciate it.
All right.
Have a good night, everybody.
Thanks, guys. If everyone has the links and everything, I'm going to go ahead and end the call. So last minute, if you want to join the Discord, just click the link.